Wow, this was not on my bingo card. Bloomberg just moments ago released an article bagging on artificial intelligence's progress at all of them almost. OpenAI, which obviously works with Microsoft and powers Copilot, Google, Anthropic, which Amazon keeps throwing money into. They talk about Apple backing out of a deal. They talk about the artificial general intelligence bubble bursting. They talk about failures of new models and some of the constraints that are slowing progress substantially. This is really interesting and in my opinion has some really big implications, and we should talk about what some of these challenges are so we kind of know, okay, like what does this mean for us? Is this really a big deal? Is this bad? Or is this just some more clickbait? Let's take a look at this together. OpenAI, Google, and Anthropic struggle to build more advanced AI. 3 of the leading AI companies are seeing diminishing returns from their costly efforts to develop newer models. Now, this is interesting to me because they specifically say with OpenAI, for example, that they're working on this model known as Orin. Orin's apparently different from OpenAI 0.1 preview you can use now, or 4.0. Just keep this in mind. These are all slightly different. It's supposed to be improvements on each other. Like 0.1 has sort of a thinking model. And when I say thinking model, basically if you give it a generic prompt, like, here's just a generic prompt I took a screenshot of. Help me write a business plan for a lemonade stand, blah, 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 right? It thinks first. Basically, what it's really doing is breaking apart your request, making a better prompt, and then responding to its prompt, which is good because, frankly, it takes the whole prompting phase away from you, which is great. But is it really a huge leap forward? Maybe not. But Orin is supposed to be that huge leap forward. But apparently, according to 2 people familiar with the matter who spoke on a condition of anonymity, it's always those anonymous leakers, as of the late summer, Orin fell short when trying to answer coding questions that it had not been trained on, which basically means it's just trying to regurgitate stuff it's already seen to you, which is a little problematic because the point of artificial intelligence is to get us to the point where it can respond to things that it has not seen before. You know, like I like this analogy of if, let's just say everybody tomorrow wants to look up the history of John F. Kennedy's life. How often do you actually have to run that compute through an NVIDIA H100? Well, the answer is once. You process it once, and then you've basically created, or just stolen, the Wikipedia article, and then you just, from cache, feed that response to all of the people who ask the same questions. I mean, how many different questions could there possibly be? Is dietary fat going to make me fat? What are bowling balls made of? What's inside of a bowling ball? Tell me about JFK. Like, all of these things could just be cached encyclopedic responses, basically. But when it becomes a problem is when newer models fail to help us solve problems that they have not seen yet before, because that is kind of what we want them to do. That's what you need in order to get to artificial general intelligence to be human-like. And they're saying Orin so far is not considered as big of a step up as OpenAI's existing models were from prior models. So basically, they're saying, hey, look, we had a big step up from 3.5, where it was like, oh my gosh, look, this is an explosion. If this goes on forever, we're going to be on the moon. And really, Orin is sort of like, maybe it's, tapering off a little. And so this is basically the definition of diminishing returns. I've actually regularly on the channel talked about how I think artificial intelligence is going to follow this stair-step pattern, where you'll have really big moments and really big momentary breakthroughs. For example, maybe a 3.0 to all of a sudden that 3.5 model. Maybe you could even give 4.0 that stair step. But what happens is these bases become substantially longer and longer. And we might not have another breakthrough, a huge breakthrough, until 2030. Which I recognize sounds depressing. I'm just saying as an example, it takes longer for those next real breakthroughs to actually come. And what that actually looks like is this exponential cost increase compared to the logarithmic decay of progress. Now, that was like a really big word sentence. Let's put it just basically, I'm going to redraw what NVIDIA said. So NVIDIA said, which is true for Tesla and all these other companies, that your costs to train and develop AI skyrocket. More talent, more chips, more processing. But at the same time as that happens, your progress actually looks a whole lot more like this, where you grow a lot at the beginning and then you taper out. So you're spending a whole lot more money to make a whole lot less progress. Quick example, just to be extreme, let's say, your first $10 million of spend got you to here, which is 50% progress. And now all of a sudden you're spending $10 billion to make 0.1% progress. It gets a little depressing in terms of how fast you're actually getting anywhere, right? But let's keep going with the article because it's very interesting. So, OpenAI, by the way, just finished their one of their initial training rounds in September for Orin, and they fundraised for that round. They actually fundraised $6.6 billion. This is considered the largest venture capital round ever, led by Jared Kushner, Ivanka Trump's husband, works with Donald Trump. They're all connected. It values OpenAI at $157 billion. And for an unknown reason, we actually saw Apple back out of the deal. Don't know if it was because of valuation or Apple doesn't like the progress or what it is. But apparently now you're seeing some stumbling blocks and these diminishing returns, which you're also seeing at Google with Gemini not living up to internal expectations, according to 3 people with knowledge of the matter. Anthropic has not seen a timetable for its 3.5 Opus release, and they've actually removed some references to coming soon. Companies are also finding it difficult to find untapped sources of human-made training data, and so you don't actually have new data to train with. So this is problematic. And now OpenAI is putting Orin through a human feedback process, which in my opinion brings me back to the days Tesla was talking about, oh yeah, we have all these humans sitting in a room and they sit around and they label things like stop signs and traffic lights and deal with edge case scenarios, which I think a lot of AI companies don't want you to realize that there is a lot of human intervention in AI training. And when AI hasn't seen a scenario before, it's kind of like, yeah, I'm going to make a lot of mistakes before I actually get the right answer here, which isn't great. Much of the tech industry has bet on the so-called scaling laws that say more computing power, data, and larger models will inevitably pave the way for greater leaps forward in the power of AI. See, I've questioned that because that's basically this sort of FOMO mentality of, oh, things are just going to go up forever. And then because there's more scale with these data centers, you'll actually progress even faster. I don't think so. I've been very much the believer that you're seeing stair steps of improvement, the 3.5 moment, maybe the 4.0 moment. But then what happens between those different stairs is it actually takes longer and longer and longer to improve, and you end up with this logarithmic curve until you truly get another leap forward, which I think is probably like a 2030. The AGI bubble is bursting a little bit, says chief ethics scientist at AI startup Hugging Face. Oops. It's become clear, she said, that different training approaches may be needed to make AI models work. It's basically a way of saying, we can't just keep trying to train with the same things we've been doing. It's just not getting us any further, which is unfortunate. DeepMind from Google says we're, pleased with the progress that we're making. Anthropic and OpenAI declined to comment. People call them scaling laws. It's a misnomer. They're not laws of the universe. They're empirical regularities. I'm going to bet in favor of them continuing, but I'm not certain of that. It's also somebody in the AI industry. A lot of things that could derail the process, like we could run out of data, say some. Plateauing performance is basically in line with my stair-stepper thesis. Not enough data to create products. Now, you could spit out clever essays and poems, but are you going to get smarter than a Nobel laureate training it off Wikipedia posts and YouTube captions? Probably not. By the way, I just want to do a quick shout-out. If you haven't gotten free stocks yet with an amazing trading platform, Webull, make sure to go to metkevin.com/Webull. Met Kevin. It's also in the description. You get some free stocks, pretty amazing, and they've got a great trading platform. They keep updating the software too. So if you haven't checked out Webull yet, do consider that. metkevin.com/Webull. I use them almost every day when I trade. All right. OpenAI in particular has inked deals with publishers to fill some of the need for high-quality data and also adapt to growing legal pressure from publishers and artists over data used to generate or build these AI products. Some tech companies are also hiring people with graduate degrees that can label data related to their own subject expertise. So now you're basically hiring humans and PhDs to write encyclopedia articles for you. You're throwing money at people. I should spell that correctly, but whatever. Tech companies are also turning to synthetic data, such as computer-generated images or text meant to mimic content put together by real people, but there are limits to that. We can generate quality synthetically, yet we struggle to get unique, high-quality data sets. You know, in my opinion, this is a little bit kind of like the problem that Tesla runs into with FSD is you don't need more data of the Tesla sitting in the left lane on the highway or really anywhere on the highway. You need millions of more edge case scenario interactions and that the AI can see over and over and over again. So far, it feels like you regularly have this lately with the latest FSD updates, this one step forward, one step back. It's a little depressing where it's kind of like, oh, okay, like, oh, that's fixed now. Oh, but now that's broken. It kind of sucks. But anyway, it's still great. Like, don't get me wrong. Like, those little setbacks suck. But FSD in general, I love. Anyway, still, AI companies continue to pursue a more is better playbook in their quest to build products that level human intelligence, increasing the amount of computer spending hundreds of millions of dollars to train bleeding-edge AI models. As costs rise, so do the expectations for each model. People are getting very excited, but Anthropic has yet to, provide a date for when its Opus is coming out. They've removed references that 3.5 Opus will be coming later this year. Challenges to develop 3.5 Opus, according to two other people familiar with the matter. Opus, some of the marketing in terms of timetable was removed. Fine. Google's still struggling to restore the ability to generate images after it gave us a bunch of woke stuff. More recently, OpenAI rolled out a preview version of O1 that spends extra time computing. That's the picture of what I showed you. Incremental improvement, I would say. They have a limit in terms of how many times you can actually use it. And the downside of that O1 is it doesn't actually give you current results, whereas like Grok does. And 4.0 at GPT does. Also talking about very good releases coming later this year, but that won't include ChatGPT or GPT-5 yet. And then now what you're getting is, like Google and Anthropic, OpenAI is now shifting attention from the size of the models to newer use cases, including a crop of AI tools called agents that can book flights or send emails on a user's behalf. We will have better and better models, but I think the thing that will feel like the next big breakthrough will be agents. Ooh. AI is already making big leaps in customer service. I do actually think that, you're going to have a massive cycle of unemployment at some point in the future because of how much artificial intelligence is being used. I mean, even if you just take 10% of all customer service workers and replace them with AI, or make existing people more productive with AI, it's kind of a game changer. I was on the phone for a stupid, very minor problem with QuickBooks for 17 minutes. And at the end of this 17 minutes, the person told me, yeah, you're just going to have to call back. Everything looks good, but you're just going to have to call back to actually make the final change. When the other team is in, they're not in right now, and you're just going to have to go through everything that you explained now again, and then because they'll be there, they can help you. And I'm like, a good AI could have told me that in the first 20 seconds. For this problem, instead of spending 17 minutes on the phone now, you should call back during these hours. Bro. It's just crazy. So there are definitely a lot of efficiency improvements that can be made at all walks of the world. But yeah, in terms of these moonshots, and then now we got to talk implications for a moment. It's worth considering there's some limitations here. But then that also makes me concerned because, what is this going to mean for a company like NVIDIA? Wall Street is expecting NVIDIA to basically, it's been doubling its revenues because, they've exploded. Oh my gosh, cheap, graphic cards are really good for AI. This is fantastic. Buy. So their revenue doubled basically in 2024. It's expected to double again by January 2025. So that's 23 double, 24 double, basically. They have a weird calendar year. Then it's expected to grow by about 50% in 2026, down to 20% in 2017 and 28, and 16% in 2029. But what happens if all of a sudden those growth rates go to zero? And you just maintain these high levels. Because think about it, you got to resell new chips. This is why NVIDIA is trying to get on a 1-year refresh cycle. Yeah. Now buy Blackwell. Yeah, now buy Blackwell 2, buy Blackwell 3. Okay, let's skip a number here, like the iPhone's done. We're going to skip iPhone 2. We're going to go to, Blackwell 5, even though we didn't have a 4, whatever, right? And it's all designed to sort of market more sales because and if people stop buying the new product because the current product is so good, then your growth rate is going to plummet at NVIDIA. And I mean, don't get me wrong, I love NVIDIA, but it's about $150 per share company divided by $2.84. You're trading for about 53 times earnings. Your expected growth over the years going forward here, the next 4 years, is about 25% per year, which puts you at about a 2 peg, price to earnings growth ratio, which actually isn't that bad for a designing company. It actually feels kind of cheap. It should be probably closer to about a 2.6 peg. But to me, that's a sign that some people are starting to scratch their heads going, crap, what if NVIDIA doesn't grow at 25%? And what if they just, even if they just keep revenue where it is and it doesn't go negative, which it could, their cash flow is still going to be really, really good. But your price to earnings growth ratio is going to be infinite. Let's go down a little bit and say they just grow at 5% per year. Okay, well, now you have a 10 peg, which is way over on the valuation, and now the valuation has to go down by 5x, which means, all of a sudden you have this AI-related crash where NVIDIA goes down to $30 a share. I'm not saying that's going to happen. I'm just saying, on a quick valuation basis, that's what can happen when people expect these insane growth figures and hopium. Again, don't get me wrong, I love NVIDIA. I think it's a great company. But this is a big red flag right here. And we saw what happened when, what was it, ARM and AMD, they missed by 60 and 80 basis points on guidance, and then their stock dropped 8 to 15% over the next trading days. Not great. I mean, look at AMD year to date. AMD is up 3.6% year to date. Look at ARM year to date, double. Not bad. Go out a year, 170. Fantastic. Had a lot of growth. But where is it from summer's peak? Actually down about 23% already since summer's peak. And ARM, might be a little different because it did IPO, more recently. When did they IPO again? They IPO'd in September of 23 after NVIDIA wanted to buy them and the deal didn't go through because of, good old antitrust. But, the question is, okay, what ends up happening if growth starts slowing down on some of these? And this article somewhat feeds us a little bit of concern that some of the valuations and expectations here could start being a little bit rich, and we could start seeing some oopsie doopsies. Now, one of the other things that we've discovered is the labor market and recession, very important, is that when stocks go up, you generally don't generate more jobs or hiring. When stocks go down, you tend to lay off more. So what happens if you now have a dual factor where stocks fall, you get layoffs, but then because you have AI, because the AI bubble's bursting, but because you have AI, you actually lay off even more or you hire back less, which makes, potential stimulus efforts from the Fed or otherwise even harder. kind of crazy. I don't know where we're going in the world, but I just want you to know I'm going to be here. We're going to work on this together, and we'll keep paying attention to all of this stuff together. So if you like this, make sure to subscribe. Get your free stocks with Webull. If you want term life insurance, it's the same thing Lauren and I use. We Apple Pay for it. It's on auto pay every month with Apple Pay. It's really great. Go to metkevin.com/life. Both of these are paid sponsors of the channel, Webull and Life Insurance. They're pretty great. Go check them out. And then if you want a free alpha report delivered to you every morning at 6:15 a.m., make sure you go to meetkevin.com/alpha. What's really cool about that is 2 days ago, I'm like, I think, the volatility is really low on GameStop. I think this one might pop. Boom, it's up 10% on the day. Yesterday, I'm like, I don't know, I'm feeling Tesla. It might be top tier. Sell some calls or maybe look at a certain put. Boom, things down 6%. Now, no guarantees you can keep that sort of stuff going. Obviously, there's risk in investing, but go check that out over at meetkevin.com/alpha. At this point, it's totally free, so you may as well sign up and get it and see if you like it. Thanks so much for watching, folks, and we'll see you in the next one. Goodbye, and good luck out there.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.